So I'll be 30 in about 2 months, and just checking my bank account the other day, I realized that for the first time, my net worth just passed over 600K. Now, this video is not a flex, and I want to make that crystal clear from the beginning. I wanted to make this video as a way to show you the things that I've done to accumulate wealth in my life so far. And along with that, I want to also just shed light on the mistakes that I made along the way. So I'm going to share 3 things that I did that I think really helped me to accumulate wealth at this point in my life. And I'm going to go a little bit deeper into each of them as well. The first biggest thing I think that I did was I started investing early. Now, I definitely have my parents to thank for this one, and I'm so thankful to them for not only giving me a lot of the knowledge that I had growing up around money and teaching me good money habits, but also even just some of the basics when it comes to setting up an account for investing and even just showing me the ropes really from as early as I can remember high school. So without a doubt, one of the biggest things that I think I did right was starting to invest from an early age. I feel incredibly blessed to have the parents that I do have, and I recognize that not everybody has parents that are as willing to show them how to manage their money and teach them good money habits from a young age. I remember from a pretty early age, all the way from 13 to 18 years old, my parents and we'd watch the news, we'd watch CNBC and Bloomberg News, sometimes before I caught the bus to school and when I'd come home in the evenings. I really had no idea what was being talked about on the news, and I would just ask them, like, what are they referring to in the economy? Like, what is inflation? And over time, I just started to learn these things through conversations with my parents. And it was a super cool way to kind of learn about the world and really just bond with my parents too. Another thing was just observing how my parents dealt with money. And, my dad was the primary breadwinner for our family. My mom, she has an incredible business acumen. And I was always learning so much from her just about how to manage our money, and whether it was going to the grocery store and trying to find a deal or take advantage of sales that were going on when we were trying to buy clothes. All of these things sort of accumulated in my mind to always try to look for a good deal and that everything is negotiable. If you're Indian, you absolutely know that everything is negotiable, and your parents will drill that into your head. I think around the age of 20 is when I actually opened up my first investment account. And my parents really guided me throughout the whole stage. They had a financial advisor who they kind of helped me to get set up with him. And through that, I had another vehicle to just ask a ton of questions. This wasn't really of any consequence until I actually started earning money around the age of 2021 when I moved to New York City. And that's really when things started to take off for me. Number 2 would be blind consistency. And this one is a double-edged sword. So initially when I started earning money, I started sending money over to the financial advisor, and I would do that maybe every 3 months after I was accumulating some money in my savings. While building that consistency of investing and saving was good, and it was a good habit at the time, I now realize that it wasn't the best decision to keep a financial advisor for as long as I did, and it led to a lot of unnecessary fees. And I could have honestly managed the money myself. Because I was kind of blindly trusting what my parents were saying and they had recommended to work with a financial advisor to manage my money, I just kind of went along with it. But now, 10 years later, I kind of feel like I know way more, and I actually have the willingness to challenge my parents on how they manage their money in some cases. And I've realized that honestly, there's no right or wrong answer, right? I have my own approach now, and it's taken me a long time to develop that. I will say I made a lot of dumb mistakes when it comes to investing, especially early on between the ages of 21 to 24. Whether it was listening to my financial advisor to get into certain stocks and those didn't pan out at all, or listening to some relatives that were telling me to get into particular investments, mostly because of the hype around them, which, now they've resulted in me just kind of losing a bunch of cash. Like I said, it's taken those experiences for me to be like, wait a second, there's something going on here. Let me dig a little bit deeper. Let me try to understand a solution for myself to now come up with my own ways of investing and my own strategies that I actually believe in and I feel comfortable in myself. Something else I did was every year that I can remember, I've really just maxed out my 401k, I've maxed out my HSA, and I've never felt like I've been hard pressed for the money, I felt like I'm doing myself a service in the future. And I've always just made that a priority in every job I've had. And whenever I have the opportunity to do so, as well as sort of maxing out my Roth IRA at the end of the year, I always try to do that, because at the end of the day, there are tax advantages for doing so. And you have less taxable money, meaning you have to pay less in taxes, obviously. So it's a benefit. I'm not naturally a big spender nowadays, and I'm finding that besides rent and food, I'm spending a lot of my money on travel, which growing up, my parents just said, travel is one of the best things you can do, and I wholeheartedly believe that. So I'm pretty comfortable, so I don't feel, again, like I'm hard pressed. I'm enjoying my life. So the second most important thing that I did to help me get to 600K in the bank was to start tracking my spending. It wasn't just tracking the spending, but it was actually the knock-on effects of that, and helping to actually analyze, one, my spending behaviors, and two, realize that, wait a second, I have the ability to save way more and invest way more. So as a consequence of that, I opened up new accounts and I started to really ramp up my contributions to those accounts. So how did I track my spending? I built a personal savings financial model, literally in Excel. And I did this being inspired by how Jenna was doing it. She had her own version of a model, and I decided, okay, I'm gonna kind of try and build my own version as well. And it kind of got pretty complicated, maybe a little bit too complicated, but it was something that really helped me. It ultimately became very manual to update, and I decided to move everything into a system called Tiller. And for those of you that don't know, I'm gonna actually do a full review, I think at some point, on Tiller, but it's a service that allows you to integrate your various checking accounts and your savings accounts and your investment accounts to get a really holistic picture of your net worth. And in addition, it's a really easy way to be able to track your spending. So then you can actually start to see things pretty clearly, like what are your monthly expenses, what is your savings rate relative to how much you're earning, as well as, like I said, you can track a lot of your net worth gain over time. So I found it an incredibly valuable tool, especially as Jenna and I are starting to think about how we combine our finances now that we're married. It's been a very, very empowering tool, because you can do all of these integrations directly in Google Sheets. And everybody, of course, can just set up a Google Sheets account, Google account for free. So it just makes it that much more easier, and there's just that much less barrier for entry as well. So like I said, I've also opened up some new accounts, and those include a high yield savings where I'm contributing $500 a month, as well as a total market index fund investment account, which is managed in Charles Schwab. And I'm putting in roughly about $3,000 a month in there, and just letting it do its thing and letting it bake in that one fund. The third most important thing that I did to help me accumulate 600K in the bank was to work hard. And there's no way around it, right? Whether it was working hard in my job or working hard to ensure that I was always improving on my financial literacy education, which, by the way, is always a work in progress, I've just been working hard. So my career really started to take off in 2017 after I joined a startup by the name of PillPack. I did a full video on PillPack as well as startup equity. And the short answer is I had equity in that company, and they ended up getting acquired by Amazon. I stayed on through the acquisition, and I ended up working at Amazon for about 3 to 3.5 years. But because I had that equity, I made about $80K in addition to my base salary. So I earned $60,000 in Amazon stock, which just continued to grow on its own. And I earned another $20,000 in cash at the time of the acquisition. And again, that was on top of my base salary. So it's almost like I made that money and didn't have to, work for a full year. At the time I was making, I think, around $80,000. And again, as I started to accumulate more and more wealth, I just got more and more interested in managing that money, and in particular around financial literacy. And all of that has really kind of been the inspiration for this channel, RoundUpSave, because Jenna and I, we both have a really big in, shared passion for personal finance, and this is a vehicle for us to develop our own skill sets. Some of the books that I've read that have really just changed my perspective on money are The Psychology of Money, Financial Freedom, and The Simple Path to Wealth, all of which I have done some reviews on, and I will link those in the description down below. So at the end of the day, it's not been easy. It's been a long road, and obviously my career is still ongoing. There's still so many things to learn, and it's all really exciting. But again, I wanted to make this video because I wanted to share my perspective and what I've done so far in the last 10 years or so to really accumulate wealth. I've made a lot of mistakes along the way at the end of the day, but I know that through those mistakes, it's only going to get better. And that's the only way I'm going to learn, right? And that's the only way that we learn is really through mistakes. So guys, thank you so much for watching the video. And if you are interested in learning a little bit more about financial literacy, I did a video on the 4% rule, which is one of the golden rules of retirement, and I will link that right here. Until then, take care and see you next time.